Welcome everyone. One of the biggest questions about Social Security is how are benefits taxed, or are they taxed at all? It's kind of complicated, but that's what we're talking about today. Stick around. So are Social Security benefits taxable? Well, the answer is a qualified yes. And the reason it's a qualified yes is because it depends on your level of income. If your income is low enough, benefits are not taxable. But most retirees, of course, have other sources of income, whether it's retirement account distributions, pensions, etc. As your income increases, more of your Social Security benefits become taxable. Like most things in the Internal Revenue Code, the formula for calculating Social Security taxation is complicated. There's an entire form the IRS provides to figure it out, and we'll look at that briefly at the end. But more high level, here's the basics. To figure out how much of a retiree's benefits are taxable, one has to start by calculating what's known as provisional income. The formula for provisional income is as follows, and I'll throw it up on the screen here. It's basically your adjusted gross income, which is the bottom number on the first page of your tax return typically, plus tax-free interest plus half of your Social Security benefits. So once you have established your provisional income, there's a calculation that involves three key thresholds, which you can see up here on the table. And the one thing I want to emphasize is in this table, we're looking at the figures for married couples filing a joint tax return. The figures for single filers are different. Now, probably the most important threshold in this table is this $32,000 of provisional income. If your provisional income is $32,000 or less, none of your Social Security benefits are taxable. But as you exceed this figure, more and more benefits become taxable, up to a maximum of 85% of your total benefits. But now, here's the probably most important thing I want to emphasize is these thresholds are not rigid. So, for example, once you exceed $32,000 of provisional income, half of your Social Security benefits don't suddenly become taxable. It's a gradual phase-in that depends on the composition of your provisional income itself, which we'll look at more in a moment. Now, when I originally was working on putting together this quick little discussion, I was going to give a bunch of examples to kind of show the differences in terms of combinations of income and Social Security benefits and how much actually is taxable. But frankly, here's a table out of a great article talking about taxation of Social Security that probably is all that most people need to know. And what it shows on the vertical axis, this is basically your combined income excluding Social Security benefits. On the horizontal axis, we have Social Security benefits. So what this grids out is basically how much of your Social Security benefits are going to be taxable depending on what combination of income and Social Security you have. So for example, let's just look at the $36,000 line item. Let's say you had IRA distributions of $36,000, and between you and your spouse, you had $30,000 of combined Social Security benefits. Well, you can see in that case, 40% of your Social Security benefits are going to be taxable. So you can, and also the other thing that's illustrated here is you can see the phase-in of Social Security, of taxable Social Security benefits. So for instance, again, let's look at the $30,000 number. If you and your spouse have $30,000 of combined Social Security benefits, you can see how more and more of those are going to be taxable as your combined income from other sources goes up. Now, if you're like me and you really are kind of interested in the mechanics behind the grid that I just showed you, you really want to get into the weeds, well, there is an IRS form, of course, for figuring out how much of your benefits are going to be taxable. And here's what it looks like. I'll put a link of that or for this in the description. And frankly, like I said earlier in the discussion here, it's really, it's kind of just bizarre how they word this and how they came up with this concept, but it is what it is. That's how the system works. Really, for most people, I think the grid in the previous slide is kind of all you really need to know. But again, if you're more interested in the details, here it is. So, are Social Security benefits taxable? Well, as we illustrated, it depends on the level of income you have. And the key threshold, as we discussed, that provisional income is really the $32,000 mark. If you're under that, none of your Social Security benefits are going to be taxable. But as income goes up, as we showed, now let me throw the grid up here one more time, more and more of your benefits become taxable, up to, again, a maximum of 85%. Now, check back with me, excuse me, because over the coming weeks, I'm going to put together another video talking about a common tax trap as it relates to Social Security. This is what the issue is if you're in the middle of this phase in, as we're illustrating here on the grid, the problem is that people often get trapped in, they end up paying a lot more taxes than they expected, is they'll want to take distributions from retirement accounts or realize capital gains, and what they don't realize is not only do they have to pay the tax on that additional income, but more of their Social Security benefits become taxable. So I'll save that for the next video. Check back with me. And look, hey, I just want to say thanks for watching today. If it was helpful, do me a favor and hit the thumbs up button. It really helps get the message out. Make sure you drop me a comment or send me an email if you have any specific questions about Social Security that you'd like me to create a video on. It really helps as I think about creating content. Obviously, if I want to put stuff out there that people want to hear about. So thanks again. I hope we'll see you in the next one.